Hi, it's Alan Laupsch with Financial Network Analytics, and welcome to F&A Correlations. Today I'd like to focus on the most useful flight to safety assets, given the escalation of risk that we saw last week with Governor Kuroda's surprise of not adding additional stimulus to the Japanese market. We saw that had a huge impact on Japanese equities and the yen, which jumped, and Japanese equities, which plunged. So we can see here that the preferred flight to safety asset for Japanese equity investors is the Japanese yen. So we can see that correlation of negative 0.74 is very, very strong. Let's look at the Japanese yen versus all the other asset classes and look at, for example, how well the Japanese yen would be, how suitable the Japanese yen would be for, say, protecting against S&P 500 exposure. So we can see that's a strong negative correlation of negative 0.46, so it's quite reliable. But of course, the strongest link here is to Japanese equities. I'm going to zoom in here a bit. Very strong link to Japanese equities, for Asian equities as well. That correlation is at negative 0.63. The Dow correlation is at negative 0.5756. So that's quite a useful flight to safety asset. The second favorite here, we can see here with this negative correlation, is the 20-year government bond, TLT, and that correlation is at a fairly reliable negative 0.54, a little bit off of its peak of negative 0.66. That correlation has been negative all year and has been quite reliable. So U.S. government bonds, the long part of the curve, makes a lot of sense. Let's look at the focus view here. Expand this to look at more correlation. So you can see a lot of red here, meaning that U.S. government bonds are negatively correlated to all kinds of markets. For example, Asia ex-Japan, negative 0.49, fairly consistent, less below its peak of negative 0.7. Germany, negative 0.43. You can see that correlation is weakened somewhat, but is still quite effective. And then the S&P 500 at negative 0.42. So this is quite a reliable flight to safety asset. It's been negative all year, and should be part of any equity portfolio. And then third, we can see out here, we have gold. Already by this positioning, we can see that gold is a diversifier. Let's take a look at the focus view. You can see that there is less reliable negative correlation across many assets, but we can see that, for example, there's a strong negative correlation to the Dow currently, negative 0.44, and that correlation has actually increased with gold and is close to its peak negative correlation, negative 0.54. So while the correlation weakened in March, we can see that correlation has now strengthened over time. Correlation to Asian equities is slightly lower at negative 0.38, well off of its peak of negative 0.56, but that correlation has also recently started to strengthen. So gold, despite reaching one-year highs, does seem to be quite a reasonable flight to safety asset. Currently, volatility here, let's look here, is relatively moderate, sort of in the middle of its range. And we can see here the analysis of the systematic risk. So the more negative that systematic risk, the better it works as a portfolio diversifier. So you can see that for a while it stopped working as an insurance policy, but still was a decent diversifier. But that negative correlation has recently increased. So gold right now is also a relatively effective flight to safety asset. So if I had to rank them right now, the Japanese yen is the flight to safety asset of choice with the tightest coupling to equities, albeit very strongly Japanese equities and Asian equities. and less strong to the U.S. And the U.S. government bonds 20-year is excellent as a flight to safety. Of course, other durations work as well, and I should note that TIPS has recently behaved quite well as a flight to safety asset. Let's look at the focus view here. For example, TIPS versus, let's find the TIPS versus the Dow Jones. It's at negative 0.2, not that strong, but at least it is a negative correlation. So here you can see this is slightly less reliable as a flight to safety. It is more kind of a diversifier than a flight to safety. Okay, and then of course there are VIX futures as well, which is pretty much like buying an insurance contract. So you can see here, you see a close negative correlation to most of those major assets, which makes sense, of course. So that's what I would say about flight to safety assets. Hope that was interesting, and let me know if you have any ideas for additional themes to explore. Email is alan@fna.fi. Thank you.